Hi everyone, welcome to Forex Trading Empire YouTube channel. In this video, I'll be doing a trade review on a trade we took on US100 in the 2025 Forex Trading Empire mentorship program. Before I start, make sure to like and subscribe to the YouTube channel. So if you have gone through our recent videos, you know that I've been talking about the 2025 Forex Trading Empire mentorship program. And the program is going to be a 12-month program in which we're starting from the 1st of December. So the end of next year. So showing you a trade review on a model we used in the 2025 mentorship program. So this is the 11 to the 12 p.m. model. This model was going to be discussed in the 2025 mentorship program. And if you're interested to join the 2025 mentorship program, the link is being linked in the description below. So there's a link to my Telegram DM. You DM me to have an access to the 2025 mentorship program. So on the 11 to 12 p.m. model, we all know that the US100, also known as Nasdaq, have been on its all-time high. So this is a trade we took before NFP around 2 p.m. New York Eastern Standard Time. So the trade was based on the idea that we were anticipating higher prices, because if you are in the Forex Trading Empire mentorship community, you know that we have been talking about the US100 anticipating higher prices. So we're anticipating higher price for price to trade higher. And there's a specific model we trade during the 11 to 12 p.m. New York Eastern Standard Time. On the 5 minutes, we saw a retracement to a fair value gap, and we are anticipating higher prices. In the process of anticipating higher prices, seeing a retracement to a discount fair value gap, because if you were to check it from the range of the 11 to 12 a.m., the opening price is the equilibrium price. Price traded below the equilibrium price to a discount, in which price is setting itself, aligning itself to the model. Price traded to a discount, and I've talked about the power of three in this mentorship program in lots of videos. Price at a discount and we are looking to buy. So we buy at a discount, set to a premium. Now, the next draw on liquidity, since the US100, also known as Nasdaq, is on its all-time high, we use a fib retracement level to anticipate the next draw on liquidity. So we use the fib level, placing the fib from this swing low to a swing high. And we're anticipating price to trade to the 50% level. So the swing low to a swing high, we are trying to look for price to repeat this same swing high to a swing low going further. And we target the mid-range. We're not looking for a full completion of the swing high to a swing low, for price to retrace completely, creating a 100% retracement of this swing high to a swing low. We are looking for a 50% retracement. And this is fully discussed in the 2025 mentorship program. So our next draw on liquidity was to anticipate price to respect the fair value gap. As soon as we took our trade, the next area we're targeting was the 50% level as our draw on liquidity. Now I'll be using a line to indicate the 50% level as our target when going into lower time frame. First, we want to see price trade below the opening price. Here's the opening price. So the opening price, I'll be using another line to indicate the opening price. Now moving down to the 1 minute. So here's the 11 a.m. opening price. Price traded below the 11 a.m. opening price, traded to a 5 minute discount fair value gap. Price traded to the discount fair value gap. The first shift of structure where price traded higher, took out this high, did a shift to structure. That was when we took our first trade. Price did retracement, stopped us out at a loss. So we're stopped out from the first attempt for price to create a new high. Now price did another shift to structure, leaving a fair value gap. We wanted to wait for more confirmation, maybe to see price to run out this high before we take an entry. So during the process, price respected the fair value gap. Here's the fair value gap. Price respected the fair value gap. Then we saw this impulsive candle showing that price is indicating a trend higher. So that was when we took the trade. As soon as the candles closed, a retracement back to the candle, we took the trade, stop at this swing low. Our stop was placed at this swing low below the fair value gap in case price were to retrace back to the fair value gap, which you can see how price retraced back to the fair value gap but did not close below the mid-range of the fair value gap, which is the consequence encouragement level. Price respected the mid-range, traded higher, did a shift to structure, retraced back to this order block. Here was a retracement back to this order block. Price respected the order block, and that was how price traded higher. You can see the precision on how price traded to the 50% fib level we indicated from the 5-minute time frame. You can see how price traded to the fib level, and that was where we took our target. As soon as we took target, price did a retracement before trading higher later on. So this is one of the model in the 2025 Forex Trading Empire mentorship program in which I've talked about. So if you join the Forex Trading Empire mentorship program and this is the 1 hour time period in which you are specializing on, you'll be taught fully on how to trade based on this time, on this 1 hour time period. But this trade, we use a demo account. I use a demo account just to show a proof that we actually took this trade, which I'll be going to the trading, execution, and so you can see the first entry. Here was the first entry, a buy we took, which I told you that we were stopped out. Price did a retracement, stop us out, and here was the stop out. Now the second trade we took, I told you guys that once we saw the impulsive candle taking out this high, we're expecting the fair value gap. We just waited for a retracement. Look at the retracement candle, back to the candle, and that was where we took a buy, stop at this low. We're anticipating price to trade higher, and you can see where we took our target at the exact point where price traded to the 50% level. You can see the precision in price. You can see this is where we closed the position at a sell at a 10 contract. Took a buy and closed the trade, hitting our target. So you can see the precision from the 11 a.m. to the 12 a.m. model. There's a scalping model we have been talking about in the mentorship program, which is going to be in the 2025 mentorship program. So that's all for this video. Make sure to like and subscribe. See you guys in the next video.